Today, we're doing a deep dive for investors into a company called Nordson Corporation. And trust me, its technology is almost certainly hiding in plain sight all around you every single day.
So, what's the invisible thread that connects your smartphone, the battery in an electric vehicle, and even something like a medical catheter? Well, the answer is a company called Nordson. And in this explainer, we're going to unpack exactly what that could mean for your portfolio.
So here's how we're going to break it down. First, we'll get to know what Nordson actually does. Then we'll dig into its competitive moat, check out its game plan for growth, look at the numbers to see if the story holds up, and finally, we'll talk price, peers, and of course, the risks. All right, let's get into it. First up, who is this invisible giant? Well, Nordson is a global leader in a very specific, very high-tech field that is absolutely critical to modern manufacturing. At its heart, Nordson is all about something called precision dispensing. Now, what on earth is that? Imagine a tiny, super fast robotic arm placing one single perfect drop of glue on a microchip in a blink of an eye. And it does this thousands of times a day without ever making a mistake. That's Nordson. They build the systems that make that incredible accuracy possible. The business is really split into three main buckets. The biggest piece of the pie, at 55% of revenue, is what they call Industrial Precision Solutions, or IPS. This is their bread and butter, serving markets like packaging and car manufacturing. Then you've got Medical and Fluid Solutions, making up about 26%, which produces critical components for things like IV bags and syringes. And finally, you have Advanced Technology Solutions, which is the really high-growth, sexy part of the business focused on electronics and semiconductors. Okay, so that brings us to probably the most important question for any investor. What about the competition? What's their moat? What stops some other company from just waltzing in and doing the exact same thing? Remember this number, 58%. This right here is the secret sauce. That's the portion of their revenue that comes from recurring sales, things like replacement parts and fluids. It's the classic razor and blades model, right? They sell you the big, expensive machine once, and then you're locked into buying their high-margin blades for years and years. It's a beautiful thing for an investor. So how do they pull that off? Well, it's really a three-pronged defense. First, they've got the tech completely locked down. We're talking over 2,000 active patents. So good luck trying to copy that. Second, and this one is huge, the switching costs are just insane. Think about it. Their systems are deeply baked into a customer's entire production line. Tearing one out isn't just expensive, it's a massive risk to their whole operation. And finally, they don't use middlemen. Their own sales force works directly with customers, building these incredibly tight relationships. All right, so that's the fortress they've built around the business. But what about the future? Where are they headed? This is where their Ascend strategy comes into play. And it's a big deal. They're trying to morph from a steady, traditional industrial company into a high-growth, cutting-edge technology leader. And they are not messing around. The goals are super clear and pretty ambitious. Get to over $3 billion in sales, and do it with juicy profitability, EBITDA margins consistently over 30%. The engine driving all this is an internal playbook they call NBS Next. Think of it as a really smart, data-driven system for placing bets only on the best growth opportunities. Now, a massive part of this strategy is buying other companies. And if you look at what they've done lately, it's pretty impressive. They snapped up CyberOptics to beef up their electronics business. Then they bought Aerog, which was a huge move into the precision agriculture space. And most recently, they added Atrion to make a major push deeper into medical technology. So you can really see the shift happening right here. They're deliberately moving focus away from some of their older, more cyclical markets, and they are sprinting towards these faster-growing areas, like medical, semiconductors, and EVs. Places where their core skill, that incredible precision, is absolutely essential. Okay, that's a great story, a great strategy. But as investors, we know a story is only as good as the numbers that back it up. So, does it actually check out? Let's take a look at the financials. First up, let's look at the top line, revenue. And what you see is a really nice steady climb upwards. Even with all the economic ups and downs we've had, they've been averaging about 6% growth per year. That's solid. But here's what's really impressive. It's not just growth for the sake of growth. This is ridiculously profitable growth. Just look at those EBITDA margins. They've been expanding and are now consistently clearing that 30% target from their Ascend strategy. That is truly top-tier performance, and it tells you they have some serious pricing power. And if you're a long-term buy and hold kind of investor, you're going to love this. 62. For 62 years in a row, Nordson has increased its dividend. That doesn't just happen. It puts them in this super elite club called the Dividend Aristocrats, and it signals incredible financial discipline and a real commitment to returning cash to shareholders. So we've got a high-quality business, a clear strategy, and strong financials to back it all up. So what's the catch, right? Now we get to the really tough questions for any investor. What's it worth? And more importantly, what could go wrong? Okay, let's be direct. This is not a bargain bin stock. You're definitely paying a premium for quality with Nordson. But when you stack it up against other top-tier industrial tech companies like Greico or Illinois Toolworks, the price tag actually looks pretty reasonable. The market gets it. This is a high-quality operation, and it's priced that way. But of course, no investment is a sure thing. So you have to ask yourself, what could possibly knock this company off course? What are the red flags we need to be watching for here? I'd say there are 3 big ones to keep on your radar. First, for all its high-tech focus, it's still tied to the health of the global economy. A big recession is going to hurt them, no question. Second is what I'd call integration risk. They've been on a shopping spree, buying these big companies. Now they have to make it all work together seamlessly, and that's always easier said than done. And finally, that shopping spree wasn't free. They've taken on more debt, so their balance sheet isn't quite as bulletproof as it used to be.
And all of this leads us to the big final question you have to answer for yourself as an investor. Has Wall Street already figured this all out? Is all this good news, the transformation, the growth, the profitability, already baked into the current stock price? Or are we actually looking at the very beginning of a whole new chapter for Nordson? Is this a chance to get in on the ground floor of that next wave of growth? And that right there is the key question.